moving on to the markets in Nigeria, we've seen the market rise a little bit recently after a bit of a sluggish week last week. Joining us from the stock exchange to run us through the numbers today is Chukwuma Anyanwu, Head of Research at Morgan Capital Securities. Thank you so much, Chukwuma, for joining us.
Thanks for having me, Wale.
All right, so after a slow start to the week, the NSE has started to gain a little bit recently, and I want to get your take on the activity we're seeing right now. If we look at the gainers in early trade today, they include the likes of Transcorp that was under pressure recently, but now it seems to be stabilizing. Do you think the current momentum we're seeing in the market is sustainable?
Yeah, it is, Wale. Frankly, we think that the positive economic news around the Nigerian economy, will lead to a sustainable, will lead to the market sustaining this current momentum.
All right, so let's talk about the banks right now. Morgan Capital recently analyzed the impact of the special cash reserve on public sector deposits introduced earlier this year, and I want to hear from you about what we can learn about the impact of this policy on the banks going forward.
Yes, Wale. Frankly, we think that the hike in CRR can be viewed from two perspectives. We think it can either be a clog, an earnings stifler, or a catalyst going forward. We think that what really would matter going forward is the management of the bank's ability to be able to take drastic proactive steps, towards ensuring that the hike in CRR and further policies, that the Monetary Policy Committee might come up with, would not be an earnings stifler. We've seen a situation where a lot of the banks rely heavily on public sector deposits, which has clearly been shown, by the impact they had on their third quarter earnings, Wale. And honestly, we think that shouldn't really be the case, because there are still some banks in that sector, in the Nigerian sector, banking sector, that didn't really suffer much the impact of the CRR hike. And those banks are banks that you notice would have very strong retail strategies.
Right.
So going forward, we expect that bank management should, as a matter of urgency, as a matter of ensuring that there is a growth, there's a sustainable growth in their earnings capacity going forward, as a matter of urgency, develop very strong retail aggressive strategies.
Right.
So that we would see that when when policies like this come up, it doesn't really become a problem. It should spur them into exploring the potentials inherent in the sector and the Nigerian economy at large.
But in your view, in the short term, do you think this is something that is likely to be a problem for the banks, say over the next 1 year? We've seen that.
Absolutely.
We've seen it impact 2013 numbers. In 2014, do you think the pressure will still be on?
Absolutely, Wale. If the banks remain docile, and still allow policies to impact the movement in their strategy, policies by the CBN, then you would see them not really tapping into the opportunities in the economy. But if strategies are developed to ensure that they are not just working in line with how the CBN comes up with policies, how the Monetary Policy Committee comes up with policy, that might disrupt their flow. If they are aggressive, if they are proactive with their balance sheet movements, we think that the banking sector has enough potentials for growth, going forward. We think there is a very good relationship between the economy and how banks perform. And from the news we've heard from the economy, we've seen some measure of improvement in the Nigerian economy, with GDP averaging a growth of 6.5% and inflation within the single-digit threshold. We think that also the privatization of the power sector, we think these are very positive news that the banks should capitalize on. So if they're not doing that, we think that's a problem for their earnings sustainability going forward, Wale.
Right, and looking at the report you put out, the standout performer in the banking sector since the announcement is Stanbic IBTC, with a return of over 25%. I know that bank has very little exposure to the public sector. In your view, is the public sector exposure another metric we must start looking at when rating banks?
Yes, Wale, absolutely. You would notice also that another performer in that report was also Diamond Bank. And it's no news that Diamond Bank has an aggressive retail strategy. Their focus on small and medium scale companies has shown that it's where the sector should be focusing on going forward. As much as we know that the stability of the public sector deposits, for banks and their lending capacity is enduring, we think that they must also, as a matter of urgency, understand that it's not just enough to sit back and, you know, allow opportunities pass them by because of the comfort that the public sector deposits provide for them. We think that like a lot of the mid-tier banks, Stanbic and the rest of them that have been able to develop strategies that have proven to be immune to the policy, we think that banks should also toe in that direction, Wale.
All right. So all that said, what are your best investment ideas in the banking space right now?
I will still, because I think banking is a volume-driven business. I will still look at the top tier banks. I will still look at Zenith and GT. We don't know why First Bank hasn't really come up with their numbers just yet. We, like every other person, is expecting the third quarter numbers to come out soon. You know, so I'll focus right now on the two banks that have been able to release the results in that case. I will also look at UBA. I think in the short term, UBA has some measure of strong earnings potential, capital appreciation potential going in the short run. Then we'll also be, of course, focusing on Diamond Bank and Stanbic IBTC.
All right. If you look at the trading day, we see early gainers include Access Bank and FCMB. Your take on those stocks?
It's fair game for every player in the banking sector. The economy is big enough for everybody to operate and capitalize on the potentials inherent. So we think that if they adopt the right strategy, hey, Wale, no personal issues with any banks. If once you are able to see clarity with your strategy and the soundness of the management decisions, Wale, I think that is what really investors price into banks, because eventually you see that banks' earnings capacity is largely dependent on the soundness of the management.
Right.
They need to know where to put their money, how to deploy their assets effectively, you know, to guarantee sustainable returns going forward.
You know, throughout last week, we were talking quite a bit about Transcorp. It began to fall, and now it's on the rise again. I want to get your take on that stock. Many calling it a play into Nigeria's power sector. We know they're also diversified into the hospitality business and even into agriculture.
It's a no-brainer, Wale. The major news that has triggered the movement in Transcorp is the power sector, their exposure to the power sector. Because before now, we've seen a relatively docile activity around the shares of Transcorp, because they've already had these businesses in line before the power sector news, and there was really no serious activity. So it's a no-brainer. It's the movement in the stock price is largely on account of their exposure to the power sector. We think that is sustainable, provided that investors don't become overly optimistic and forget the fact that just because you have invested in a sector that has the potentials for growth doesn't mean the company automatically makes money. You still need to be able to adopt the right strategy, ensure that you are operationally efficient for your potentials to translate to bottom line profitability and eventually dividend payout, because that's what investors will be looking at going forward.
All right, Chukwuma, let's leave it there. Thank you for joining us, Chukwuma Anyanwu from Morgan Capital.